G'day folks, welcome back to another update. Today we're looking at high-grade copper, which consolidates. Platinum is turning bearish, and US crude is also continuing its bearish momentum. Before we go any further, make sure you hit that like and subscribe button to support the channel. It'd be greatly appreciated. Also, reference a +1 videos where we look at deeper dive into some of the trading strategies you can adopt. In terms of the outlook for platinum, entering its third consecutive year of major supply deficits, around 966,000 ounces in 2025, following at 992 kilo ounces in 2024. Price surge of around 40 to 44% year to date, driven by tight fundamentals, Chinese jewelry demand gains, and substitution away from expensive gold. Fundamentals are strong. Short-term supply demand is inelastic, limiting immediate relief. For high-grade copper, short-term caution, JP Morgan expects LME copper to decline toward $9,100 per tonne in third quarter 2025 due to inventory and tariff adjustments. Long-term constructive demand from energy transition and electrification remains robust. Supply is slow to respond, keeping long-term outlook positive. US crude oil supply growth, especially from non-OPEC and OPEC outpacing demand, raising risks of surplus. Current price forecast Brent is $67 to $68 a barrel. Weight traded is 64 to 65 a barrel. Marginal support from geopolitical tensions and Chinese stockpiling, but surplus risks persist. So first looking at high-grade copper, we had this massive plunge a few weeks ago on the weekly, you can see there. Now since then it's been consolidating, but notice the CCI and the price are below the moving averages. So overall a long-term bearish momentum on the weekly, and there's no sign of a pullback based on the weekly yet. On the daily, it's actually, again, still consolidating. It's actually broken above the moving averages of the CCI and just recently broken above as well on the price. But notice here it's pulling back into the moving average of the price in the last few days of trade. Likewise, the CCI. So you could have taken a couple of small trades during that period going long. If you're trading on the 1 hour time period, and going short from this period back here would have been fruitful as well. On the daily, on the hourly, what we're looking for is any micro moves. And by micro, I mean any divergence you might be able to see. And working backwards, we're trying to identify any highs and lows. And you can see there all the CCI and price movements are in alignment, so there's no divergence to talk of. So nothing there to be concerned about in terms of bullish or bearish divergence. If we go to the back test, again, going long from this period back here when the price broke above the moving average, and also the CCI, and that's where I've started the back test here on the 1 hour time frame. And the 1 hour strategy here, again, we trade in direction of the daily, but we also trade in direction of the moving averages of the price and also the CCI, but also when the CCI 14 in the middle indicator here is breaking to the upside. And here you can see the few trades made, a bit of an average down made there. No trades during this period when it was declining, and then more recently another trade opened there and closed. And since around about the 28th of August, it generated about $793 for this particular contract. So this is US crude. You can see here it's a very long-term trend, still in a bearish momentum below the moving averages of the price, and also broken below the moving average of the CCI. That's again a bearish momentum. On the weekly, on the daily, it's actually been fluctuating above and below those moving averages. Bit of a consolidation happening back there, but it broke above. Very couple of days there going bullish, and now it's currently in a bearish momentum again on the daily. If you're trading on the hourly, the daily's broken to the downside of the price as well as the CCI moving averages. And on the hourly, again, we're looking for any divergence, for any potential reversal. The CCI is broken into the moving average. It's not a complete reversal, it just could be a bit of a retrace. The price is still below its moving averages, so still predominantly bearish trades to be taken. So at the moment, it looks like it's in a short-term bearish momentum, but over longer term, it's sort of still consolidating in this range. And on the back test, again, from the daily going short back here on the 5th of August, and I've started the short positions here. You can see that you would have taken some short positions there, a couple of average downs there, single trades made during that period. And more recently, because the price is moving against you, that would have averaged down a few times there, and you want to avoid that. And the way to avoid that is whenever you see a bullish divergence or any break above on the moving averages, then you would have not gone short. For example, back here, when it's in that long positioning, you would not be going short. You can see there that on the daily, that was still long, and you want to predominantly trade in the daily direction, so you want to go long during that period. So during this period, you want to be then starting from there, you would have started going short again. And lastly, for platinum, on the weekly, you can see there the price has been very strongly bullish, but notice it's pulling back. You would have closed out any long trades if you're trading on the daily based on the weekly, whenever that CCI breaks into that moving average band, and it would have done so on the top of that, right near the top of that range on that first red candle there. That's the weekly trend. On the daily, it's already broken early on back here on the CCI, giving us a bearish divergence. You can see there lower highs on the CCI versus higher highs on the price. That actually broke down and hit our 23-38% Fibonacci range. And by that target range, we draw it back to that significant low before the divergence started. And that's a 23-38% range. And more than 90% of the time it hits this range. Sometimes it drops a lot further. Other times it just kisses it and bounces. We don't really know how far it's going to go. In this case, it just bounced into that range perfectly, hit the 38% and bounced from there. So at the moment, small move to the upside on the daily, but I wouldn't be going long. And the reason for that is because the CCI is still pretty much bearish below the moving averages. So taking short trades from that period if you're trading on the hourly. Now on the hourly, again, what we look for is any divergence. We had a couple of divergences back here. In the more recent one, we had back here bullish divergence. So if you're going short during this period, as soon as you notice that bullish divergence with higher lows on the CCI but lower lows on the price, you're going short during that period, you would have closed out your positions at the very latest once that broke through that moving average range to avoid any further damage and taking any profits if you had entered in somewhere up here somewhere. Now, that's trading based on that alone, those two, the moving average of the price and the CCI. We had another bearish divergence back here, and you can see there it broke into our 23-38% range. In this case, if we drew the Fibonacci to that point, and just to demonstrate, it's dropped well below the 100% retrace level. In fact, it's gone down to 161% in this case. But again, it's hit this 23-38% range very easily, consolidated in that range for a while before breaking further down. Again, we don't know how far these breaks make, these divergences go. We always look at a potential minimum and take our profits if we're going, in this case, if we're going long, you would have taken any long profits as soon as you started seeing it drop below that moving average range on the price and the CCI breaking to the downside. Now, if we go to the back test, what I've got here first off on the, let's go to the short positioning. So going short currently, now this is looking at all three indicators, the price moving averages, the CCI moving averages, but also the CCI 14, and you would have taken short trades. However, there were no open trades according to the logic of the program. You want to make sure they're all in a downtrend in accordance with the moving averages in a downtrend of the band. But what I've got for you, so there are no trades made on the short side, but what I've got for you here is going back to this period, around about the, whatever that was, the 16th of April, back here on the hourly, that would have been a nice long trade you could have taken during that period. Again, notice here we had a bit of a drawdown, and why you would have avoided that, notice here we had a bearish divergence versus higher highs on the price, and you should have avoided that that major drawdown. Some of these other smaller average downs happen with small drawdowns. You could probably stomach those. Again, there was a couple of average bearish divergence there you could have avoided, but overall you would have done quite nicely had you gone long during that period. And at the moment, avoid going long because of again, because the daily's in a downtrend on the price and the CCI. Don't forget to hit that like and subscribe button to support the channel, but also reference the Patreon page where we look at bullish shares on a weekly basis from various regions of the world's markets. Thanks, and see you in our next video.